Welcome back. Like we've been highlighting, the market's taken it on the chin, and a lot of NBFCs are now coming under selling pressure. We've been talking about M&M Finance, of course, that's been locked on circuit. But apart from that, Canpin Homes is down about 5%. Selling happening in Cholamandalam, Shriram Transport, Indiabulls Housing Finance, and a lot of these outperforming auto stocks are now beginning to cave in. So names like Mahindra and Mahindra, Ashok Leyland. And surprise, surprise, actually on a day like today, it's the IT stocks which are sort of still trying to bat for the bulls. Infosys is up about 0.5%, and Pharma is doing well. DV's Labs, Cipla. So classical risk off is happening right now. Lever is doing well, for example. So classical risk off, all the defensives are seeing buying, and the recent outperforming ones, they are seeing some kind of selling pressure. We'll address, of course, M&M Financial as well in a bit. For now, we have a management joining us. Vishal Bhola is Managing Director at Whirlpool. He's joining us to discuss the new laundry portfolio expansion plans and how demand is as we are shaping up for the new festive season. Vishal, hi, good morning. Thanks a lot for joining us. Can you tell us more about the launch of your new portfolio and expansion at the Pondicherry plant? What markets are you targeting, and what are the investments required to scale this up?
So we're doing a very exciting launch. It is the Ozone Refresh fully automatic washing machine. It's a segment where we've traditionally not been present, and therefore it gives us a huge opportunity to get into a segment which traditionally has been a white space for us. We have made an investment of about 115 crores in our Pondicherry plant. That's where we're going to make it. So that's the exciting news for the day.
Okay. With the start of festivities, I'm sure you'll get a lot of demand as well. But what is the on-ground situation? Is there any inventory build-up?
So it's actually, I won't look at the total market as a whole. I would almost take a de-averaged view of the market. What we are clearly seeing is in the mid and premium segment, there is a lot of demand coming back. There are a lot of consumers who are not only coming back to the market, they're actually demanding products which have got higher capacities, more premium products. So the mid and the premium segment, we are seeing a lot of consumers come back. In the entry segment, I think consumers are still being a bit more choiceful around what they want and a bit more conscious in terms of the value which they are seeking out of what they buy.
Vishal, there's a correction in input prices recently. What are the price hikes that you took in Q2, and are you looking at more sort of price hikes going forward?
So we keep calibrating based on what we see in terms of commodity price increases. And in the last 1 year, we would have taken about a 6 to 10% price increase in terms of what we've not been able to absorb. So we, of course, look at all three ways, whether it is internal technical productivity measures, whether it is supplier negotiations, and if we're not able to mitigate all of that, look at price increases which we pass on to consumers. So in the past year or so, we would have taken about 6 to 10% price increases.
Okay, 6 to 10% price increases. What is your market share now across categories?
So our ambition, we are one of the top 3 players in the country, and that's our ambition going forward is to make sure that we are growing faster than the market. I anticipate the market to be growing at double digits for the next few years for sure. And our ambition is also to grow ahead of the market, and therefore we would be targeting double-digit growth, but ahead of what the market grows.
Okay, Vishal, just hold on for a bit. Let me just revisit M&M Financial. That's now down 13.5%. I mean, there's some serious slam dunk happening in this stock. When we started trading, it didn't look like the market will react the way it is. Maybe because today's market texture is also impacting, but 13.5% down, it's almost approaching that 15% freeze. So big moves happening on the downside. Vishal, I'll just request you to hold on. Let me address this big move. Abhishek is joining us to explain. Abhishek, tell us, 14% down now.
Well, Anuj, as you know, RBI has taken action against M&M Finance collection methodology. So they have directed M&M Finance to stop recovery operations via third party till further orders. So we don't know how long this order will go in. M&M Finance can carry out, recovery or repossession activities only via their employees. So they have a total employee base of a little less than 19,750 odd number. So we had the management who told us, they have stopped third-party repossessions, and they will further examine whether and how third-party agents will be used in future. So I was just taking a back of the envelope calculation per month about, they are saying that 4,000 vehicles will get impacted, and if you calculate that, it comes around to 160 crore, so which is about 480 crore of quarterly collections that can get impacted as and when we don't know the timeline of this order. We already have Morgan Stanley on M&M Finance. They have an overweight rating and a target price of 225 per share. They say that the impact on collection and hence asset quality will depend on the share of outsourcing which is done in collections. So they say that management will make alternate arrangements in terms of having their collection efficiencies. However, the length of time of this order, that remains a key concern, and which is why we are seeing the stock plummeting by more than 10% in trade today.
Okay, thanks a lot, Abhishek, for that explainer. So that's M&M Financial, clearly one of the biggest movers on the downside today. But let's get back to the management of Whirlpool, who's been waiting by patiently. Mr. Vishal, thanks for waiting by. Just wanted to ask you about the replacement demand. Is there a rise in replacement demand versus the first-time buyers?
I think we're at a very interesting stage in the last decade or so. We have seen a lot of growths come from penetration demand. But as we go forward in the next decade, it is going to be not just penetration demand, but also replacement demand, because all of these people who bought appliances in the last 10 years are now coming back to do their replacements. Clearly, the replacement demand is becoming a bigger chunk because there has been so much increase in penetration over the last 10 odd years. So a lot of these people are indeed coming back to now buy their second appliance.
Vishal, what about demand in rural India, and is inflation hurting you there?
I think, again, as I said before, I would take a very de-averaged view of what is happening. There are clearly, even within Tier 2, Tier 3 in rural, there are segments, there are geographies where consumers are spending more. And there would be cells where they're being far more choiceful and far more conscious about value. So I think more than rural or urban, what I'm seeing is the kind of consumers who are buying mid and premium are actually splurging much more versus the ones at entry who are being careful about their purchases.
So what about the contribution of e-commerce to your total sales? What is it currently? And are you seeing a disproportionate growth in e-commerce now?
We saw a major uptick during the COVID period, and now it is kind of stabilized in the 10 to 15% contribution range. So currently e-commerce, which includes our direct-to-consumer business as well, is about 10 to 15%. And it is stabilized at this level versus some of the explosive growths we saw during the COVID period.
Okay. Do you have any capex plans?
In the last 2 to 3 years, we have actually spent about 900 crores on various kinds of expenditures in India. So we have put up a line in Pondicherry where we spent about 110 crores. We have put up another line in Pune on our refrigeration plant where we have spent about 180 crores. We spent about 12 crores in Faridabad where we have put in another line for semi-automatic washing machines. We have put in about 600 crores in terms of taking majority stake in Elica. So as of now, where we are, we feel very comfortable about the spends which we've made. And they should take us into, next couple of years. We won't require any capital expenditure to expand our business. But as you know, we've got a very strong balance sheet where There is no debt. We have a lot of cash on our books. And if there are other opportunities, we would definitely be open to spending cash there.
Okay, so for washing machines, washers and refrigerators, can you tell us what proportion of components are now locally sourced and how much is dependent on imports?
So about 70%, and I'm now averaging it out across the entire portfolio, about 70% would be local and 30% would be coming from outside.
All right, Vishal, we'll leave it there today. Thanks a lot for joining us. Good talking to you. That's on Whirlpool. Just want to highlight on the market, the stock that stands out right now is Infosys. Pull out the intraday chart of Infosys, and that's single-handedly led the Nifty off the lowest point of the day. Just look at that move in Infosys stock. And this is very interesting. Maybe the market is latching on to this currency decline. I mean, of course, currency at best is headwind or tailwind on margin. But, given the way the rupee has just seen a big slide, that's at least a bit positive for IT in general. And of course, we had Accenture's numbers as well. Maybe they were, the stocks very close to 52-week lows. So in its wisdom, the market thinks that maybe one move at least higher is warranted. And that's why you've started to see that move in Infosys, which is helping the market at least off the lowest point of the day.
Not just Infi, Anuj, there is LTI, which is L&T that's up about 1.5%, L&T Infotech. There is Persistent, which is up 1%. The big one, of course, pulling things is Infi, but Mindtree is up about 1.25%. These other names will also come up. They're all at the day's high. Persistent is up about 1%. HCL Tech, that huge underperformer, even when the market was doing well, the IT stocks were doing well, it was underperformer. That's up about 1%. Oracle Financial Services is up 0.5% or so. There is TCS, which was up about 0.4%. Emphasis, it's very difficult to make anything substantive of the move. It could be just a little bit of pull up after being huge underperformers for so long. It's one large area in the market which has not done well. Well, we got our next management with us, the management of NHPC. Mr. R.P. Goel is Director of Finance of the company, and he's joining us to talk about how business is shaping up. CLSA, which is a large foreign brokerage, Mr. Goel likes the stock, likes the company. They think, the analyst there thinks that the company is set for a big re-rating. We'll get to that and their estimates and whether you agree with their estimates. But can you tell us right now what is the situation? What are realizations looking like? Just a sense so far.
Yes. Good morning. As of now, we are operating 7,071 megawatt capacity on standalone consolidated basis, and we are working on active construction for 7,000 megawatt capacity, including 1,000 megawatt solar capacity, and similar capacity, say 7,000 megawatt is under pipeline. Under construction projects are likely to be commissioned by 2027 in phase manners, and our outstanding position is very much comfortable. We have no overdue as of now. We were having overdues in respect of J&K to the tune of 1,300 crore, which have been agreed to be liquidated by the J&K in 28 installments. So as of now, there is no overdue, and we are having dues of to the tune of 700 crore only, which are less than 45 days, and these are yet to become due.
Okay. So no overdues currently. All right.
Yes. Yes.
Can you give us a little more updates on the business? I was going through a note from CLSA where they said that the company will benefit from a multi-decade opportunity of India's net zero commitment. They are forecasting a revenue earnings equity growth of 130% from now till FY27. Can you tell us what is the sustainable growth that you see in terms of revenues? Many of your projects as well that I think were long awaited are finally going to be operationalized now, like Parvati. So just give us an update on how the next couple of years will shape up.
It is true that we are going to add our regulatory equity to the tune of 9,000 crore in next 1.5 years. Our Parvati 2 and Subansiri lower project, whichever biggest project of NHPC, these are going to be commissioned in FY23-24. Our plan is to commission Subansiri lower 2000 megawatt capacity by August 23 and 800 megawatt Party 2 by December 23. So we are seeing a very excellent future in hydro, and our regulated equity will be to the tune of 2,200 crore by 22,000 crore by end of FY 23-24. But full year benefit will be available in FY 24-25 because we are commissioning these two projects in second half of the FY 23-24. And we are balanced under construction projects. We are going to commission in phase manners in 24, 25, 25, 26 and 26, 27.
So this Parvati project, what is the timeline for the operationalization of that one? And what's the capex that you're putting?
Yes, December 23 is our timeline. By end of December 23, we will commission all the 4 units. And actually, rest of the balance work is only 650 meter HRT excavation. So, as per our plan, it will be daylighted by March 2023, and full commissioning will be by December 2023. And capex on this project is to the tune of 10,000 crore, out of which 3,000 crore is regulated equity.
Okay.
So,
go on, please finish that.
So, as per our plan, our top line will be to the tune of 13,000 crore by end of FY 23-24, and our bottom line will be more than 5,000 crore.
Bottom line will be 5,000 crores. This is for 24, FY 24.
FY 24.
Okay, you did 3,500 crores, right, in FY 22.
Yes.
Okay, so about a 40% growth from the 22 levels in 2 years.
Yes, yes.
And you said, okay, and 13,000 crores in top line from about 8,500 crores, which you did in FY 22. Got that. We'll leave it there. Thank you very much, sir, Mr. Goyal. Appreciate you joining in, and good luck, sir. And I would love to get regular updates from you in terms of how you're on the path to the targets that you've set out. The market, is there is no discernible large attempt at a pullback or a dip buying kind of thing which is coming through. Although there is that impulse, but we've seen so many times in the first couple of hours the market dips sharply, and there is a powerful move higher, which is not yet visible. Maybe it's the end of the week, maybe it could be a bunch of things. There is already, remember, and I've been making this point, we're already sitting on, when you look at day-to-day market being down, you got to see how much outperformance the market is sitting on relative to what's happening in the globe. So you can't isolate one single day's move and say, well, the market is doing badly or is doing very well. It could be correcting an earlier overreaction or vice versa. So that's where we are at. We are at 17,474. We are back under that trend line, the downward sloping trend line from the all-time high, just by a little bit. I mean, the market's been, whipsawing up and down over and over again, at least over the last 6-7 trading sessions, just around that particular line. We'll take a quick break here. Mitesh Thakkar will be joining in with some technical trading ideas. Stay tuned for that.
Welcome back. Well, a couple of themes which stand out clearly. Financials under a lot of selling pressure. I think today is a bit of an algo trade. Buy IT, sell financials. It's pure rupee trade which is playing out right now. The Nifty Bank is at the lows. Just look at that, 2% lower. And Nifty IT, if you pull out that, that index would be right opposite, absolute mirror image of that, trading at the highest point of the morning, 1% higher. So there's a big algo pair trade playing out right now today, and not just Infosys, others like Mindtree, L&T, Infotech, Persistent, Coforge, all joining in right now. Mitesh is back with us. Mitesh, your views of the lows, courtesy IT. How do you approach it and your stock calls?
In fact, that would be the important part here. I think IT is clearly showing signs that it will hold out in a market which is still range bound and mildly choppy. Though the Nifty is now getting closer to the lower end of the range, I still believe that there is no sign of reversal as yet. So rather, focus on IT, where at least the hourly and the 2-hourly charts are showing a bounce back from oversold level. So L&T Infotech is a buy. keep the stop just below levels of 44.60 here, look for targets of 46.20. And on the selling side is Chola Finance. I think there's some knockoff effect on the other finance companies as well. So Chola Finance is breaking below key support areas. So we'll suggest a sell here with the stop around 771 for targets around 720.
All right. Thanks a lot, Mitesh, for that. Back to the top story this morning. The board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel. Listed entities including Tata Steel Long Products, Tin Plate, Tata Metallics and TRF will be merged into Tata Steel itself. Nigel is back with us to tell us the key takeaways from this consolidation. Nigel.
Well, that's right. For the past couple of years or so, the management has been hinting that, yes, they want to bring all these listed entities under one umbrella. But the problem was, when was it going to happen? That's finally been announced. And now you have Tin Plate, Tata Metallics, Tata Steel, Long Products, as well as TRF from the listed space. They'll be coming under the entity that's Tata Steel. Remember, Tata Steel, in most of them, they already had more than 50% stake, barring TRF, where they had close to around 34% stake odd. The merger ratios as well should come up for you on the screen. And most of them were in line, but barring Tata Steel Longs as well as TRF. TRF, well, the stock has seen a sharp run-up, and the merger ratio was most unfavorable out there. So let's run you through why a few of these stocks are down. For TRF and Tata Steel Longs, well, both those two stocks are lower. One could be because of profit taking. The second factor will be because of the unfavorable merger ratio that's been announced. Tata Metallics, remember that had, that the street was betting on that you'll get a bit of a better valuation. Why is that? Because earlier they were only pig iron. Now they've moved into ductile iron pipes business as well. So the street was sensing that maybe there could be bigger value that could have been emerged out of there. So a little bit disappointed with the merger ratio that's been announced. That explains why those stocks are under pressure. Big benefits, simplification of the group structure and synergy benefits as well. But talking about benefits, let's highlight two big benefits out there. As of now, Tata Steel Longs as well as Tata Metallics, both of them are procuring the iron ore requirement from the parent, Tata Steel. Because of that, they have to pay an additional royalty of around 22.5% on. Post this consolidation, that's the big saving that comes out there. And the other factor is Tata Steel Longs. Remember, the balance sheet got heavily leveraged because they picked up NINL, and the debt number went up by to more than 10,000 crores odd. So when it comes under the parent, as since it was already being consolidated, it gives them some breathing space out there. So both those two are positives. We had the management earlier today, and Mr. Kaushik Chatterjee, well, he said that it'll be EPS positive from day one. And also he said that there'll be cost savings to the tune of close to around 1,500 crores. Bulk of that will be from royalty. Back to you guys.
Okay, in fact, we had that conversation that Nigel was just referring to. Let's cut across to that. Kaushik Chatterjee talking about the rationale behind the merger, the synergies that it involves, and that 1,500 crore cost saving that will come in place for Tata Steel. Listen in.
After successfully merging and integrating Bhushan Steel, it was logical for us to look at the other subsidiaries which are of strategic relevance. And I think with these companies, all of these companies have, the businesses actually have a great future going forward. So first of all, it will be a simplification. And we have in the last 4-5 years taken out across Tata Steel Group about 120 companies. All of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these are all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one. Annually, the annual number is close to 700-800 crores.
So I'm assuming that if this was a benefit of 700-800 crores, and if that's less than 50% of the benefit, then overall the synergy benefits will be in excess of around 1,500 crores.
On an NPV basis.
Okay, that's the sum and substance and the reason why Tata Steel is up 1.5% today. Big savings coming in from this consolidation. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get talking to Nathan Sheets of Citi on the implication of the Fed hikes that took place. Stay tuned.